Central banks have been selling gold for the first time in a decade. That's the news articles we're seeing at the moment. But what does this mean for the price of gold in the short term? I discussed that in this video. Hello everyone, it's Sajad. I hope you're having a great day. So before we get to the gold technical analysis, before we get to the charts, let's just have a look at what's in the news at the moment with regards to gold. And this is the article that took my attention. So central banks sell gold for the first time in a decade. And if you actually have a quick stroll through, you'll see that countries including Uzbekistan, Turkey, Russia, they've posted their first kind of gold sales recently. Now that could just be some profit taking. If you look at this particular chart here, and if we're assuming that this information is reliable with regards to central banks and net gold purchases or sales, you'll see here a downtick just recently, and that's the first time we've seen that since kind of late 2010. So what is going on there? What are they forecasting? Now I have a few ideas with regards to this. I believe you have to think about gold in a few different ways. The main way you here talked about on YouTube, which is absolutely right, is a hold and a store of value, because it doesn't really kind of create any income for you. But the other thing you have to consider is how much is gold used with regards to industrial products, manufacturing. Also, how much is gold used in jewelry. Now, if countries are forecasting, central banks perhaps are forecasting that nobody's really going to be interested that much in jewelry in the next 6 to 12 months, given we're in a recession in most countries in the world. And given because of the state of the pandemic, there will be a slowdown in industrial manufacturing, where actually silver is used more than gold anyway. Then are they hedging here by selling at decent prices? And are they forecasting that gold will probably move down in the next 3 to 6 months? We'll discuss that on the chart in a minute, but that is what could be going on here. But please comment below. Let me know what you think would have been the reason for this. So we're getting some comments here, but again, we have to be careful. Is this just what the media is feeding us whilst secretly everybody's accumulating gold? It's a valid question to ask there. Is there some accumulation going on? And when you actually have a look at the chart, the long-term chart, where you take into account, let's say, the last 20 to 30 years, it does look like a bit of a cup and handle picture. So it could be just mass accumulation going on, especially when we have heard recently talks, we've heard from the IMF, and even people like Powell have actually commented on this, saying that there needs to be some sort of currency reset. I mean, when you think about that, you do wonder if gold will be used again in this type of reset process. And this chart illustrates it better when we talk about jewelry, technology, ETFs, central banks, and you can see here kind of gold demand in tons. Again, how reliable this chart is, we can't say for sure. This is a chart from Bloomberg, but you can see that jewelry, a little bit more demand in quarter 3, quarter 4. I mean, we are coming into the Christmas period, of course. But demand when it comes to ETFs, you can see that was a lot less than quarter 2. But perhaps that could be with regards to the current price of gold. The other thing we have to, of course, think about in terms of spot price is supply and demand. And it says here, total supply of gold declined 3% year on year as mine production remained depressed. So we have to think about, what will the supply be in the coming couple of years? If the supply remains depressed, which very likely it will be in terms of unmined gold, then what will happen to the price of gold? Will it remain stable then? So we'll always have that stable kind of level of $1,600 to $1,700 an ounce, or are we going to see below $1,000 an ounce levels again before we get some meteoric rise in the price of gold? That's what we're going to discuss now on the charts. Okay, so we're on the charts now, and a few things I wanted to discuss. We're going to have a look at the gold-silver ratio and also have a look at the main ETF, so we'll get onto that in just a minute. And as always, if you're enjoying the video, please click the like button and comment below. It really helps me out here on YouTube. So let's have a look, first of all, at GLD and GDX. So let's have a look at recent price action, and then we'll have a look at the long-term view. So what we're seeing here on a 4-hourly chart is, first of all, the move we saw from beginning of August down. So we've seen a strong move down, strong kind of correction down. But here, you could say this could have been a low from which, a platform from which we develop another impulse up. it's not looking like that's the case here because we're getting a lot of overlapping price action and we continue to gap down. So another way you can look at this from the bullish point of view is we have ongoing correction. So it could be something like a WXY. So kind of a joined together zigzag moving down. That's one way to look at it. It's the same situation on the GDX. If we actually zoom in onto the 4 hourly here, it's the same but actually worse because you've seen we've broken that support there, we've broken that structure down, suggesting there is more downside to come. And let's just have a look at the gold to silver ratio before we get onto gold spot. So this is actually a daily chart, and you can see here, the kind of average levels we've seen over the last 10 years or so is gold to silver ratio of anywhere between 65 to 70. That seems to be the norm. But then we had that massive move up where at the beginning of March, where the panic was in full flow, the actual gold to silver ratio had changed and had gone right up to 126. So there's a couple of things I think to take away from here. One thing to take away from here is that when there's panic, gold is the best store of value still. And I don't think that's changed. Even when you take into account cryptocurrency, gold is where people go to. And I think that's important for us to know when we have a look at the gold chart, because if we're predicting what could happen in the next 6 to 12 months, and we're now starting to see lockdowns and a similar situation to what unfolded in March, we have to be aware of that. We have to be aware that people could liquidate and turn to gold when they don't know what else to do. So my point here is really that they'll turn to gold first a lot more than they may turn to silver, even though silver at that time and in the last few months was better value. I think that has changed now that the gold to silver ratio has returned to these levels. I think you can't really argue, based on, as I say, the last 10 years, you can't really argue that gold is overpriced as compared to silver, given why people are turning to silver and gold at the moment. So rather than jewelry, industrial production, it's store of value that we're looking at. So on the long-term gold chart, so I'm just going to scroll out to a weekly chart here. We've seen quite clearly here what looks like a cup formation here, and what I think could happen here is if we get a move down but it's corrective. So in classic technical analysis, you get this type of formation sometimes. So you get an impulse move up and then you get correction, but the correction takes the form of a cup and then a handle. And then we get continuation of that original move. And what the handle part, how it usually kind of forms is corrective move down, like almost like flagging downwards like this. Now, if that's what's going on here, and this can last, maybe several weeks going into months, but if that's what's happening here, then what we should see is something like that, and then we find support, and then we start our next leg higher, which could be very, very strong. Now, that's one way to look at this from classic analysis. The other kind of larger scale way to look at this, let me just remove the drawings here. The other way to look at this is ongoing correction. So a massive correction up, and then one more final leg down before we move up again and continue that move that we saw in the early 2000 upwards, where we got to record prices of gold, which obviously we've actually overcome in recent months. So let's get on to the 4 hourly and see what's happening with price action right now. So the first thing I like to do when looking at a chart fresh like this is I like to mark off what I can see clearly. And what we've seen here is sideways movement. Since that top we had at the beginning of August, it looks like we've had an impulse, some sideways movement, very likely could have been a triangle, and then another impulse down. So that would usually complete an ABC correction down. And then here, you could be thinking, well, we have support here. Are we going to move up? But we've just talked about the gold to silver ratio, and we've had a look at the ETFs where we've actually seen this support broken, which suggests that we could now see another move down. If this is indeed an ABC, this could combine with another corrective move down. That's yet to play out. Now, what are important levels we need to look at if that's what's going to happen? We have to just look left and see where we had previous resistance. So the 1850 level is obviously key because that's where gold found support. Other levels I can mark off here that could be significant are the 1760 and also here at the 1790 level. So if we continue to move down, those are levels I will be looking at. And in the first instance, because we've had this uptrend, so basically when you think about multiple time frame analysis, what you're thinking about here, let me just remove some of these drawings. On a weekly chart, I've just shown you we're in an uptrend. And on a daily chart as well, you have to say, since August, we've been moving down, but we're generally in an uptrend. However, in the very short term, 4 hourly, we are in a downtrend. So we're seeing lower highs and lower highs. However, it's the larger trend that prevails here. So the first thing to look for here, if we get a continued move down, is to see if there is a buy setup that forms in the coming weeks, especially if there's wide scale panic again. So here we saw that correction down in March, which actually in hindsight now wasn't particularly significant on gold. But ever since then, ever since those lows, we saw gold rallying. It would be first and foremost us looking for that move. Another thing to note about gold and silver is they are somewhat correlated to the S&P 500 and general stock market. So that's important to be aware of as well. I mean, not precisely in terms of these tops that we saw. However, even back in March, you saw that it was almost a liquidation event with everything going down. So if the stock market continues to correct and move down, especially as we have this election looming, more restrictions in various countries, then you would expect to see gold move down as well. But it's whether as the stock market moves down, gold starts to do something in the opposite direction. So we get kind of a trend line forming down, and then we get a break of that with volume and support. That might be a very, very good buying opportunity in the coming weeks and months. So just having a look at other indicators very quickly. So we're here on the daily chart at the moment, and let's have a look at the RSI and the MACD. So what we can see here, the RSI, nothing to note at the moment. Obviously we were overbought in the area end of July going into August. You can see that clearly here on the chart. So that needed to correct anyway. That's happened. So we can't say we're overbought or oversold at the moment. MACD, interestingly, we got that massive momentum spike. We tend to get these, if you look back, this was the highest spike we've seen going back the last kind of 2-3 years. We tend to get these at tops of wave 3 rather than a wave 5, which is what makes me think we could still have correction and one more leg up, not only in gold, but also potentially in silver and the stock market. One more final kind of rally up. But anyway, we'll see how that plays out. But the interesting thing on the MACD here in the shorter kind of time frame is we're under the zero line. So we had a kind of bullish crossover potentially here that may have failed. We've not managed to get above zero, and we could be turning back down. So that would suggest more downside to come here. And then if that does indeed play out, what you're looking for is 2 peaks here. So one peak here, and you're looking for divergence, especially on the 4 hourly between those 2 peaks in price. So price is going down, but the indicators are pushing up, RSI and MACD. So ideally that's what you're looking for. And if you get that set up, that could be a very good buy opportunity. And that could materialize at some point in the coming few weeks, possibly even sooner if it's a sharp move down. And just have a look at the moving averages for general overall trend. And I like to use the exponential moving averages here. What I'm interested in is not the price action in relation to the moving averages, but how the moving averages is behaving compared to the slower moving average, which is the blue line. And if you have a look at the entire kind of uptrend we've had in gold, especially from kind of mid to late 2018, you've seen that the red and orange line are clearly above the blue line in general on this long-term trend. Very slight dip underneath at the end of 2019, very slight dip in March. However, what's very interesting now on the daily chart is they're all converging together. Are they all going to converge and set up for a massive downtrend? That's what we're looking at. Or will this just be a brief pause before price continues to trend upwards and maintained by that slower moving average? That's what we're looking to see at the moment. If you'd like to learn more about chart analysis, including how to come up with your own trading ideas and setups, then I have a comprehensive program. It's the first link in the description below. I'm currently running a special promotion as an early Black Friday offer. So if you're interested, there's also a coupon code down below as well. If you have any questions, you can just email me. Otherwise, have a great rest of your week, and I'll be back with another update on gold very soon. Thanks for listening.